And we're live, traders. Welcome back to the third episode of the System Development Series. I am joined, as always, with Cass from CDFX Trading. Cass, say hello.
Hello, guys. What's up?
Right, I think we'll get into it. Today's a very important episode. Today's about establishing rules. Last episode, we spoke about different concepts. The first episode was more of a general overview of how to build a system and what the series is going to be all about. Today's a really, really important episode about how you can go out and establish rules for yourself. And we're going to give you some examples of the rules you can actually establish and then progress towards the testing phase. So let's get into it. First slide, let's get going. So, as always, we've got a little disclaimer. I won't read it out to you, but what I will say is neither me or Cass are financial advisors, as much as we'd like to be. We're not financial advisors. Whatever we say is our own opinion. If you make money in the markets, that is your responsibility. If you lose money in the markets, that's also a responsibility. Have a quick read on the screen. Pause it if you want to. You know the drill by now. But without further ado, let's get into the meat of the presentation. So, let's just have a quick overview of the table of contents. Why establish rules? I'll take this one away. Rules and the nature of a system is built around rules. When we trade, we need to have certain parameters that need to be met before we execute a trade, because otherwise our trading will be all over the place. Rules are so important to me, especially because they help limit our emotions on the market as well. They help keep us in check as traders and make sure we're trading with that edge that we spoke about in previous episodes. So having rules and establishing rules is almost compulsory if you want to have a certain level of consistency in your trading. Let's keep going. How to establish rules. Cash, you want to just have a bit overview on that one?
Yeah, sure. So once you know why you need to establish rules, it's time to actually build the rules. But a lot of people don't know how to approach this process. So we dive a bit more into how you can establish rules. And then we give you some examples to actually start making rules yourself, because next session is all about testing. But if you don't have any rules, you don't have anything to test. So that's why we give you an example to get started right away.
That's it. I think we're going to give you some examples later on. We're going to give you a bit of a template to follow as well. As I say, this series, in fact, is here to take you from start to finish, give you that blueprint, give you that template to start building your own personal system in the market. And we're going to give you an example first. I'm going to give you a template of what you can follow, progress into the next stage of building your own personal system within the financial markets. Right then. And of course, as always, at the very end of the episode, we're going to have a quick recap and then we're going to have a preview to the next episode. Let's get into it. Cass, take this one away. Why establish rules? We've already covered that a little bit.
Yeah. So why do you need to establish rules? Now, first of all, the last time we spoke about the concepts. If you have been taking action right now, you know certain concepts you want to use. If you don't know which concepts you want to use, watch the previous video, because we give some examples about concepts you can use in your trading. And then establish rules. Now, why? First of all, it's easier to test things, and testing is so important. But if you don't have clear rules, it's very hard to test something. If you have just a concept or an idea, you can think about it, you can see it on a chart, but to actually test it and get a data that is usable to build an edge, that's very hard if you don't have clear rules. So that's one of the reasons. And the next one is guidelines. You want to know what you want to test. You want to know when you're in the market. So by having rules, you have certain guidelines you can follow when testing. And it all comes back to creating the clarity in your trading and in your testing, because clarity is so important. You need to know when you need to be in the markets. You need to know when you don't need to be in the markets. And that's maybe a more important point, where you don't need to be in the markets, because everyone wants to trade. But these rules really help you to create the clarity and only be in the markets when you have a proven edge.
Right, and before we move on to the next slide, I'll touch very quickly. And I've probably droned on about this before, but it's so important, so I'm going to stress it again. Having that clarity and having the own objective set of rules, that means you do a certain thing in the markets. If this happens, I know what will happen next. If this happens, I know what will happen within my system. I know what I will do next, because it means that you are in complete control. When you start just doing whatever you feel like in the markets, when you see a big green candle, you just place a big trade on, when you see a big red candle, when you're in a trade and price starts moving against you, you are going to be in a very emotional state. So to have this set of rules that you believe in, that you've tested, is going to give you a further sense of clarity and more confidence in your own trading system. And at the end of the day, that's going to give you more consistency and that will give you more pips in your back pocket. Right then, let's keep it rolling. How to establish rules. And this is the important part because me and Cass can talk about rules all day. But if you don't know actually how to build them yourself and any real examples of that, it's very, very difficult. Now, last episode we spoke about concepts, and this is very, very key. Now, if you haven't watched the last episode, you're going to find it up on screen, I think in the top right-hand side. Pause the video now because you might be a little bit lost about what a concept is. Pause it, go watch that video, come back to this one. First thing, so choose your concepts. What part of your system are you actually building this rule around? Is it liquidity? Is it candlestick patterns? Is it something to do with certain opens in the markets, the London Open, the New York Open, the Tokyo session, whatever it can be? What is the concept that you're trying to build a rule around? For example, if there's a big green candle at the start of the London session, what will you do next? Is that part of your personal system? Or if my indicator tells me to do this, what will I do next? Is that part of your personal system? So first thing to do is to choose the concept you're building the rule around, whether that's candlestick patterns, some sort of open strategy, so market open strategy, whether it's going to be indicators, whether it's going to be some sort of measure of liquidity, whether it's going to be something to do with volume in the market. That's completely up to you. But the first step is to pick the concept you're actually building that around. As I mentioned before, if you haven't seen it already, go watch last episode if you don't understand what a concept really is, because we explained it well last episode. Let's keep it moving. Cass.
Yes. So once you know which concepts you use, and it's important that these concepts are concepts that you enjoy learning about and that fit with you. That's very important. Otherwise, you won't stick with the testing and you won't stick with trading these concepts. So that's number one. And then break these concepts down into pieces. Let's say you want to be a breakout trader. Well, what defines a breakout to you? Because a breakout is quite subjective. Do you wait for a breakout of a daily high, weekly high, trend line, level, moving average, etc.? There are so many things you can test and build your trading around. So let's say you want to trade a breakout, really define what a breakout is, and put rules around that. Let's say if you're a trend trader, how are you going to define a trend? And again, there are a number of different ways. So really dig down in the concept, break it up into pieces, and then start defining the concept and build rules around it.
Right then. If then statements, as I just mentioned, I think that's something I've said a lot this episode already. If this happens in the market, then I will do this next, right? That is the fundamental of what a rule really is within trading, at least. It's about a certain situation that might occur, and you know already before it even happens what you will do next. As I say, that is so crucial for a certain level of consistency, because if you know that if I adjust my stop loss at this time of the market, if I adjust my take profit at this time of the market, in the long run, that will bank me more pips because I know that from my testing, then you're more likely to stick to that. And it's all about, if this happens, then I will do this. And it's not a case of having to think about it. You already know before it happens. You've got your system somewhere. You've got all the rules that you need to follow. It doesn't need to be 100 pages long, even just a simple set of rules that you know before they even occur, certain situations in the market. If this happens, then I will do this. Cassius spoke about breakouts, but how do we quantify a breakout? How do we quantify a trend? How do we quantify a reversal? How do we actually measure that? You know, as I say, all these things are very subjective. What is a trend to me might not be a trend to somebody else, or a breakout, etc. But it's understanding and having some sort of rule, equation, statistic, data, whatever the case may be. If this happens, then I will do this next. And that will guarantee you a certain level of consistency within your results. The consistency, as I say, it might not be consistently where you want it to be. It might be consistently poor results, but you can build on that until you get a consistently good set of rules that give you a positive amount of pips, a positive performance in the market over the long term. Let's keep it rolling.
Yes.
Examples. Cass, I think you can take care of this one.
Yes. So now you know why it's important and how you can approach starting to establish rules. we want to give you a bit of an example. So this example is going to be around a price action pattern. It's going to be a daily pin bar. So that is the concept, the daily pin bar. But now you need to know, why is it working? Why a daily pin bar? And what exactly is a daily pin bar? So you start defining it. So let's hop onto the charts right now to give you a better view of this. All right. So we are at the charts right now, and I want to speak about the daily pin bar. Now, a pin bar is different to someone to anyone else, but to me, this is a clear pin bar. It's a bearish one. A bullish one is obviously upside down. So let's first start with the concept behind it. The concept behind it means that during this day, we had buying, but these buyers got cut off at the high, and we got a very strong rejection, meaning sellers are stronger at this point. So I want to look for a short. That's the concept behind this pin bar. And that's something you can do for your own candlestick patterns or whatever you want to use, but you need to know the concept behind it. The next thing you want to do is define a pin bar. So for example, rule number one you can put in place is the length of the candle has to be, for example, longer than the candle previously.
Right, I can see how you're sort of building this now and quantifying it.
Yeah. And let's say you have another rule. So for example, for the bearish one, you want the body of the candle to be 1/3 or smaller than the entire candle.
Right.
That's rule number two. Rule number three could be body in the lower half of the candle.
Right.
And this way you are really quantifying what a pin bar is to you. And that way you have clear rules that you can test, because now you know exactly what a pin bar is. Now you can start testing. And for example, you have a pin bar over here and you want to test, all right, what are the odds of the next day being bearish after this pin bar? And then you can really start testing and testing and testing. But it's very important that you first start with a concept, then break it down into rules, and then you think about, all right, what do I want to test? Do I want to test a certain target? Do I want to test a certain bias? So for example, you could test, like I just said, what are the odds of the next day being a bearish day? And then you can use it as a bias. Let's say there's a 70% chance that the next day is going to be bearish. Then you know you want to be trading to the short side. And then you can, for example, go on the lower time frames, test an entry, and you can build an entire strategy around it. But it all starts with the rules you establish.
That's right. And I think, just touching on it before we move back to the presentation, looking at this example right here, you even got another one on top of the chart there. I can see it already. You have these pin bars and you see exactly what happens afterwards. And it's like talking a different language to me, because this is not a way that I trade. And that's something that's so important that I want to stress. You know, me and Cass are both very passionate about building a system, but we both trade in very different ways. So this is only one example of rules you can have. It doesn't have to be candlestick patterns if that's not your thing. We've already spoken about in previous episodes and also today about making sure you actually enjoy and actually interested in studying the concepts that you are. Some people are mad about candlestick patterns. Some people, like me, are mad about indicators. So it is having your own style, having your own influence and personality within your own system, things that you actually want to go out and study. But looking at these examples, even though as not a candlestick pattern trader, I can see that, you know, if you actually had some sort of system in place here to make sure that you're making yourself aware of when a pin bar is forming, look what happened in the market. You've had a really aggressive sell-off from the top, then a further sell-off from the bottom. And you can use this on the higher time frames. Looking at the daily now, you see a pin bar forming on the daily. That means you can go into the lower time frame, as Cass says, find an entry and look for those shorts. So it's completely up to you as a trader. Find something that suits you, but it's great to have your own personality in the markets and do something you actually enjoy.
Yeah, definitely. And this is also the way I trade. I don't use a pin bar, but I do use just a simple candlestick pattern on the higher time frame, and then I go to the lower time frame to trade into that direction, because if a certain thing happens, I know the odds are in my favor. So there you have the if-then statement again. Then I know, all right, lower time frame, look for an entry, and it's all very rule based. And that's the point where we also want to bring you to, so that you have more clarity and really have a process you can follow, and you know when the odds are in your favor.
And we're back over at the presentation. We're kind of towards the end now, but we're going to sort of blast through the rest of this and keep things going. Now, here's the thing, right? We spoke about this last episode, and it's still so relevant, and it always is in life in general. We've talked about system building, but you have to go out there and take action. Me and Cass can't do this for you. We've given you sort of the basis and the basic understanding of what a system is and how to find the concepts that you enjoy, and even an example of some of the concepts that me and Cass trade. But you have to go out and do that for yourself. So first step is to pick your concept. We spoke about that in a previous slide. Find something that interests you. Find something that you're willing to put the time in to test many different variations, whether that's a candlestick pattern or indicators or whatever the case may be. Pick something that suits you. Break that down into pieces. Break it into smaller chunks that you can test out. Let's take the example of candlestick patterns once again. We've just spoken about pin bars. If a pin bar forms, I'm going to do this. That's the one. You can break it down like that. One example, a pin bar. Okay, next example is a bearish engulfing candle. What we do in that situation. Next is a break above the trend line on the daily time frame. What will you do then? Break it down into manageable sized chunks, because it can seem very overwhelming at the start. So first step, pick your concept. Second step is to break that concept down into pieces. But make sure, number 3, that it needs to be 100% mechanical and testable rules. You have to be able to quantify this data and have something that you can test. Because if you don't have certain variables that you can actually test against each other, like a scientific experiment, how can you compare one result to another? I think I spoke about it in a previous episode. Somebody said, and they were quite right, I don't know who said it, a very famous person, if you can't measure it, it doesn't exist. And it's so true for trading as well. You need to have something that you can compare to the next set of rules you do. So it's a fair and even experiment. It's like a scientific method. You need to have something you can compare, so you know if you've changed this variable, if you change the setting on the indicator from this to this, and you're doing better now, you know that that was responsible for the change. It wasn't something that you chose to do differently in your own mind. You've got a set of mechanical rules like a robot, and you're executing on those trades, and you can measure them against the next variation of that concept. Cass, do you have anything to add?
Yeah, I do. So to get back to point number 3, make 100% mechanical and testable rules. Most people I speak to think they have these rules, but when I ask them, like, all right, so can I make it into an expert advisor? And they're like, I don't know. And then you are not clear enough. So you should aim to build as clear as possible rules that can actually be programmed. It doesn't mean you are going to program, but if you keep that in the back of your mind, it's way easier to build clear rules, because it's a fact that most people think they are clear and they have the rules, but from my experience, that's usually not the case. They are way too subjective and they think they aren't.
Right, and I feel like one more thing before we move to the next slide. Now, there's always a saying that if you can't explain it to somebody, then you don't understand it yourself. I don't think that's true. But if you sit across the table with another trader, a seasoned trader with experience in the markets, and you can't actually explain your system to them, rule by rule, as if they were going to trade it themselves. If I sat down with Cass right now, explain my whole system to him, and after what would be a couple of hours conversation, he looks at me and says, I don't know what you're talking about. I don't know how to do this. Then we might have a problem there. I'm not going to say you need to be able to explain to everyone, because trading in itself is is a skill that not everyone will understand straight away. But if you can't sit across the table as a seasoned trader, speaking to another seasoned trader, someone with experience in the markets, and explain the nuances of your system, certainly to the 99%, then there could be a problem there, because it needs to be something that you can write down on a piece of paper and tick off as you go down the list when you're trying to execute a trade. So it's really important to have those rules, not only for testing, but also so you can have a certain level of consistency.
Yep.
Right. Cass, take this one away, mate. Recap and preview.
Yes, so to recap the session, you now are one step further into building your own system. You now know how you can approach building rules. So you got the concepts. It's now time to build rules yourself, because next session is all about testing your rules. So First, build the rules. So as soon as you finish with these rules, with this session, start with building your rules and make them as clear as possible. That's really important because most of you, I think, when you watch next session about testing, you will find that your rules aren't clear enough to start testing. So really take action on this, and then the next session you will learn how you can test the rules, gather some statistics, and actually build the edge that fits with your personality.
That's right. Next episode is going to be super, super important. I think it's going to tie everything all together. Testing is like the backbone of what we do when we build a system. As you say, we can't just throw things together and expect them to work. We need to know if they work. And not only work individually as rules, but work in conjunction with each other. You know, when you couple rules together, you've got this rule for a daily pin bar, you've got that rule for a measure of liquidity. What happens when you put them together? Because sometimes the sum can be more than the actual parts. You know, you have one rule that does this, one rule that does that. When you put them together, they become a great combination that actually takes your system, to the next level. So that's something to be aware of as well. Next episode is a big one. Make sure you stick around for that. But as I say, testing is a really, really important thing. I spent a lot of time testing different indicators because that is the road I went down. But as I say, next episode is all about testing. Don't miss out. Right then. And that wraps things up for the episode. A bit of a shorter one today. We kind of blasted through that in record time, actually. But I hope you really enjoyed things today. I hope you've learned something in the episode 3 of the System Development series. There is more episodes to come, so stay tuned. Like, comment, subscribe, all of that YouTube stuff. Put the notifications on so you don't miss a thing. And also, you need to go check out Cass's channel because Cass is my special guest. He is the one who's tying this whole series together. I really appreciate his expertise. Go and check out his channel because there's a lot of amazing stuff over there. Lots of educational content like this. Amazing content and massive value to be unpacked. Take action and execute on what we told you today, and you'll be put in better stead for a long-term career in the Forex markets. Cass, do you have anything to say?
I hope you guys really take action, and I hope you really appreciate this session. And like Christian said, stay tuned because more is coming soon.
Cool, man. We'll catch you in the next one. Cheers, guys.